Hi guys. I've updated my programs to do end of day trading and swing trading with the volumes. Um, the blue triangles. See all these blue triangles here? They're in this indicator section. This indicator section up here. They're also on above the candles down there. The blue candles mean that the candle has volumes. Um, for day trading and end of day trading, I had to move to 15-minute candles. 1 minute candles and 5 minute candles were just too short to analyze day trading. Also, you couldn't when you're looking at day trading. I'm sorry, not day trading. Swing trading or end of day trading. When you're looking at those things, you basically have to see the bigger picture. So like if we were to see the bigger picture, yeah. So this is kind of small. Let me zoom in a little bit. So each one of these dashed lines is a day, and anyway, so you can see that this day went downtrend, that day went uptrend, this day went sideways, this went down. So you can see if you look at the big picture, it's like a up, down, up, and then it starts going up. A boom, a boom, a boom. So here's your peak, valley, peak, valley, peak, valley. So, what I'm saying is, when you're doing day trading and swing trading, you really need to see the. I'm sorry. Let me start over. When you're doing the end of day trading and swing trading, you really need to see the bigger picture. So that's why I had to go to 15-minute candles. Okay. Um, so let me talk. When you're using the blue volume indicators, they mean you have to understand how to use those. So what we have to do is I'm going to define two situations, or three situations. Um, if there's a blue candle, so just one blue candle before the end of the day, and that's all there is. Don't trade. Don't enter. There's just not enough data to enter the trade or exit the trade. You need to have at least two candles, so that so at least the second next to last candle will be blue. That would be this situation. The next to last situation's blue. Next to the last candle's blue, and the last candle's blue. So all you're really worried about this one. So that's two situations. Situation one is the blue candle. One blue candle at the very last bar, don't enter. The second situation is you might have one blue candle set at the next last bar. And the third situation is you might have several blue triangle candles at the end of a day. Those are the three situations. So all right, so if we just have one blue candle end of the day, I told you that situation, don't enter. If you have several blue candles or blue triangles at the end of a day, that basically means that the trend is going to change. In this case, the trend went. I will show you this in more detail, but the trend was going up, then it went down, then it went up again. Okay, so there was some trend changes going on. However, you might have a third situation where at the end of the day, the next to last bar is a blue candle, right? So you don't have a whole bunch of candles, blue triangles before it, and you may or may not have a blue triangle after it. So we're keying on to the next to the last bar, and the reason is because when you're trading, you have to, and let's say you're on the very last bar and time's clashing up. The candle's going to be going up and down, it won't be finished. And this triangle here might start out with red, then go to black, to blue. So you have to wait for the candle the candle to finish before this last one occurs. So you have to look at this one, which is the next to the last bar of the day, and it's a blue candle. Okay. So the situation is, if you have, this is the situation, and what it basically means is continue with the trend. The trend's going to continue. So, in this case, if you look, the last half of the day, the first half of the day goes down, the second half of the day goes up. So it's gonna keep on going up like that. So the trend is going up like this. Now, since we have a blue triangle, the second to last candle, or next to last candle, that means continue the trend, right? And also look at the green momentum. It's green, which gives you double evidence that it's going to continue to go up. So if you're going to do it at the end of day trading, you'd get in, you'd see this candle, and then all of a sudden you start you actually start the last candle, and that's where you'd enter your trade. Because this next to last finished, it's a green momentum, and the trend is going up. Okay, so I want you to look at another situation where, again, next last bar of the day you have blue triangle, but this time the momentum is red, and you're like, all right, well that means we should go down. Well, if you look, it does go down, but then it starts going up. And then this one, notice it just flat out goes up. So in both cases, after the first few bars it went up. So I guess you'd say more like the long-term trend would go up, even if you have a red momentum. So what this red means is it kind of short-term in the first 1 or 2 bars of the next day, it might go down, but then it's going to start going back up again. So let's look at this one in more detail with one blue candle, next last bar, and red momentum. The trend. Well, I sorry guys, I can't. This. Oh yeah. You see that this was the trend. The trend, long-term trend going up, and then it went up to a peak, and it was coming back down to the valley, and then going back up again. But the long-term trend is going up. Long-term trend is up. And in fact, if you look over here, the top row says long-term trend is up. So again, this situation where next to the last candle is a blue, and you don't have any blue candles before that, it's just a single blue, that tells you that you're going to want to continue the long-term trend, in this case is a green. Yeah. The short-term trend is showing down, right? So it does go down short-term. It continues down short-term, but then it goes back to the long-term trend. So, but basically, if you have this situation, one blue candle, blue triangle, at the end of the next to last bar of the day, you want to continue the long-term trend, which is up. These things aren't always the top row and the next top row of these indicators aren't always the easiest thing to look at. When you're doing end of day trading, it might be more important to you to catch the short term boom down, right? So when you see this situation with a red here and a short red there, you might want to catch the short term trend down. In this situation over here, you have a short term trend going up, and the long term says it's going down. It hasn't quite switched over yet. It ends up switching over the next day, but in this case, you're gonna try to, it's gonna go up. Let's see if we can find another situation where you have. Yeah, okay. So here's another. Next to last bar is a blue triangle candle, And notice that this situation looks really almost like exactly like that situation, right? As far as, see this, the top row is green, which is the long-term trend. The second row is red, which is short-term trend. You got a red momentum and a blue triangle. That is really close to this one here. See, in this one you have a long-term trend green, but then notice that the short-term trend is sort of like green, black, red, red. So it's kind of more up and down iffy. And you can see that in this situation, you might expect, on this situation when you had a red momentum and a red short-term trend, it went down. But this situation over here, the candles were the same, the next day it went up. And you shouldn't be really surprised at that, because in both these cases the long-term trend is up. Plus you can see this diagonal trend line is going up. So when you look at the momentum here, red, that's red, or over here is green. It's not quite as important as this for the long-term trend. Long-term mean not just the first 3 bars of that day, but up here after the first couple bars of the day. After the first couple bars of the day, in all 3 cases, it's a trend up. It's a trend up, right? So you can look at some more examples. Okay, so this one, it's the last bar of the day, don't enter. This one we have lots of candles. Remember, there's going to be a trend change. Since the trend has been going down, you'd expect it to go up. And as a confirmation, we have this situation here. I want to talk more about multiple blue triangles in a day. What you kind of do is you have to look at the next to the last bar of the day still, and notice it's right here, blue triangle. And now that you have a red momentum, okay. So what happens in a red momentum is people are exiting the short. In other words, up here you had people shorting, and the momentum, it was price, and they're shorting. You can see, boom, boom, boom. The price is going down. The price is going down. And when it gets down to close to the end of the day, people kind of like, hey, I want to make my profits for the day. The price is, I've shorted over here, and the price has gone down. I want to take my profit. So at this point in time, they exit the short, which is called buy to cover, and that's why you see this red momentum here. They're exiting. So that means all the volume that they were sitting on, stocks that they had controlled, now are becoming free. The price is low. It's a good buy. People are going to start buying. It's going to go up. That's what this red momentum on a downtrend. And basically, the motivation of people is to make money, right? So if they're shorting here, which people that are buying in bulk, the moving market movers or all this bulk here, most of them know what they're doing, so they're buying in bulk. And since the price goes down, you can tell they knew the price was going to go down, or they're driving the price is going down. So the price is going down. By the end of the day, they want to get rid of their money. So they're going to get rid of their money by they'd shorted up here, so now they've offloaded their stocks, and now it's a great price if you want to go buying, right? First you short here, you start here, and then you short. Now it's low, so now you're going to buy to go back up again. Does that make sense? So that red indicator says that they're exiting out of their short. So the momentum of the volume, since they're exiting the short, is going down. Normally what happens is after people exit their short, then they start a buy. That's what this green is here, because they know it's at the bottom of a long trend. Now it's going to go back up again, so they're going to buy low and sell high. right? You have to trade before this part happens, the last bar happens. So, but you can look at this bar and you see the red momentum, you see a downtrend, you see lots of things happening. You know that there's going to be a trend change because all these bars are happening. That means a trend change. Several blue volume things changing. So since there's going to be a trend change, the trend has been down. You know it's going to go up, and then you see this red momentum. Everything says it's going to go up. So this end of day trade, you'd say, once you see this, you'd say, I'm going to think it's going to go up. So you'd put in an order to buy long, and sure enough, the next day it goes up. And you can hang on to it until you first see the first blue bars, and things are going to change. So in this case, you would have bought in at about 48.4, and you would have exited out at about, the first blue bar was around here, so maybe there, 48.7, you would have made like 30 cents, which is about 7%. Or you could have analyzed this part here. What do these blue things mean? And I don't want to go into this part here, but this is the price is going to increase. So you can keep on waiting until it increases, till it gets to the end of the day, and then you exit it. So in that case, you'd have made about 4 to 4. You'd have made $1. So that would have been great. That would have been about 2%. Okay. The next one is, sorry. Okay. So there's two situations. This situation here, and then over here, this situation. They're similar. Notice there's lots of blue triangles. Lots of blue triangles. Over here, lots of blue triangles. So in that case, they're similar. But one difference is that let me move down. Look at the price itself. This one over here has been coming down, so you're at the bottom, right? And this one over here, you've kind of been going sideways. You've been going sideways. So previously you've gone up, and then you've gone sideways. Now notice that the trend line was broken. There's like see this trend here? It hit down here, hit down there. This diagonal trend line down here, down there, and then down there. And all of a sudden the candles start breaking through it till finally right there, one whole candle is like totally below the line. So that's when the trend's broken. And at that point a new trend has started, right? So you have to do new trend line from here. So you could draw one from here to there. That's a trend line. So in other words, it's been going up, and then this one kind of going up. But then we also got to look at the top. What happened on the top? Well, this is a peak, and that's a peak. We draw a straight line. So it's kind of like it's sort of going up, but sort of going sideways. We can even draw a line from here down to there. So it's really, this is called congestion. And so this is a bunch of congestion. And so the traders aren't sure what's going to happen. Is it going to go up, or is it going to go down? See that? So it has to, the end of the day is impetus for those guys to get in and get out, because that's it seems like this type of stock is doing. So you look at this thing right here, the next to last bar of the day, and there's a green one here. So there's sort of a good rule that what happens is this green means enter a short. And usually when someone enters a short, then the next one is red, because people are then going to exit a long. So when people enter a short, then other ones are going to exit the long. Okay? We saw that over here. Right? This was guy short up here, and they exited the short. Now they're going to enter the long. So always remember the two phrases. It's easy. Exit short, enter long, and then the vice versa. Here, this is a long. Exit the long and enter the short. Okay, so we're kind of in exit the short territory, and so it's gone up and then sideways. So people are thinking, hey, so what happens is the people that want to start shorting, they do they do when you're on an uptrend, right? You're on an uptrend. The first thing that's going to happen is, for some reason, the exit enter the short happens first, and then exit the long. So in both cases, the short comes first, then the long, right? Let's go back to this situation over here. See, the first thing that happens is you exit the short, and then you enter the long. So the short comes first, and so when you see this red bar here, there's two blue ones first, right? The first blue one means blue one with the red momentum. The red momentum is exit short, and then the next one is enter the long, green. All right. So now we go back to this one over here, and we know that the first one's going to be the short. Green is enter short, and then the next one, we would have expected it to be a red, which should be exit long. In this case, it's a green. But for our purposes, we're going to enter our trade. That we're going to trade. We have to wait for this bar, this next last bar to happen, and then we're going to enter our trade here. So we can't really look at the last bar of the day because we have to make our minds up to trade or not. So we look at this one, and all the symbols, all the indications are that, hey, this green means enter the short. That when you enter short, that means you're expecting to go down. The second thing is we have all these blue things here. That means, hey, there's going to be a major trend change. And so I say trend had been up, then it went sideways. Now it's going to go down again. And so going along, we see a single blue bar, blue triangle candle. Next last bar, continue our trend. If you remember, the trend was down here. Trend was going up, and so this trend broke. This was the trend for the last half of the day, whole half of the day. So we're going to continue the trend. That's what means continue the trend. So we're going along and come to the next day, a single blue triangle. And this is the continuation. The trend line's been up. You can kind of see it's been actually kind of going sideways, but that's the short term. I already talked about this. Whenever you see this next last blue candle, the blue triangle, whether the momentum is green or red, continue the trend. In this case, when you see this, it might expect it to go down a little bit. In this case, since it's been going kind of congested immediately, then you can kind of suspect when this red one comes on, it might go down a little bit. But the long-term trend's been up. That's what the green is up here. Okay, moving on. Okay, again, a single, I call it only one blue or a single blue triangle. Next to last bar, continue the trend, which is up. And here's the long-term trend line coming up again. And right here I have uptrend is broken. Okay, so right there's a broken trend. The candles went below, right over here. So the trend's broken. So it's going uptrend, it went sideways, and now you see all these again. Once the trend's broken, you see all these blue volume triangles happening. So what's going to happen? Well, you look at the next to the last bar of the day candle, and it's black. It's not blue. So now you have to look at the previous one, and it's red, right? And I'm sorry. In this case, it's like a double. You have all these blue candles happening. So if you look at, you got two reds and two greens. So what this is like a double. So what it's saying is remember I was saying that shorts come first. So these two greens are saying short, and the two reds refer to the long. Again, so when you have green momentum for the short, that means enter the short, and red means exit the long. So in both situations, the price is gonna should go. You'd expect the price to go down. Um, and what happened? The price went up. So it didn't go up very much though, and it eventually came back down. So anyways, what you would have done would have been enter around over here, which is about 50.75, and you would have tried to, when that line was broken, you would have tried to exit over here and saved your situation. What you could have done is exited over here somewhere and taken a small loss. So it would have been 50.75 to 50.8. So a 5 cent loss. So let me do that. 0.0. That's your 5 cent loss, and you got a $50 stock, and then times to convert it to percent. Okay, so that's a 0.1% loss. So you could have, if you saw it spike up the next day, and you're expecting it to go down, you could have kind of like panicked and said, "Hey, I think it's going to, I need to get out." You would have had a 0.1% loss, right? Or if you would have been a little bit patient and see all these red triangles, which are like no volumes going on. Here's a dark triangle, which means like average momentum's going on, but in all cases the momentum's red, so you know it's starting to go down. When it goes up here with red triangles, it's like ignore it, because it's like just going up. There's not any volume going on, so those are like no volumes. So this is like a red one. That's a red one. Momentum's either red or black, so things means it's either going down or staying the same. And whenever there is a black triangle, it's red, so that means it's going to be going down. Same here, down, 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 down. So you could hang on to it, and pretty soon it comes down here. So if you use these indicators, then it's best to go down. You can use this to wait to enter the trade. The other thing you can look at is if you want to wait to play this a little bit differently. There wasn't a next to the last bar blue triangle, but you could look at the one previous to that. And previous one to that, we have the same type of situation. We got red, red, red. So this also says to go down. So you might want to think about, when you see situations like this, not trading at all. Well, that's the end.